Hello guys, in this session we will be discussing about the government budget. The government's budget. We must remember the government budget is nowhere mentioned in the Indian Constitution. It is Article 112 which talks about annual financial statement. So this annual financial statements holds the key for the government's budget, but the word budget is nowhere mentioned in the Indian Constitution. So if we look to the budget, so budget has the two aspect. If I write, budget has the two key elements that we need to remember. Firstly, it has the revenue side and the other is capital side. And even in the revenue side, there is a receipt side and an expenditure side. So I will be taking you in detail about these, all the dimension that I have just told to you. So firstly, we will look into the receipt side and then expenditure side. So firstly, we will look, the government has the, what budget says. Budget is nothing but the entire ways of government to get through the revenues and how the government spends such revenues into various schemes and departments. So firstly, there is a receipt and then there is a expenditure. So government does expenditure. As you already know, we have various schemes by the government, and government also gets money to finance these expenditure. So in this budget session, we will be looking into receipts and expenditure. In the receipt side, there are two ways to get to the receipt. Firstly, there is revenue receipt, REVENUE, revenue receipts. Then we have capital receipts. The important point that you need to remember is why it is called revenue and why it is called capital. Revenue is because the receipts which we get through revenue doesn't dilute the liability of the government nor create any asset for the government. They are simply the receipts of the government which they have got. So it is recurring. The feature of this revenue receipt is it is recurring. And second feature is no asset oblique liabilities, created or reduced. So we have got the features. But if we look into the capital receipts, so they are non-recurring. Non-recurring means there is no surety that you will get this capital receipt time and again. And secondly, they are in terms creating the asset reduction or liability increment. When I say asset reduction, that means when the government sell its assets, so basically the asset, so government gets the money out of it, but the assets which the government was holding initially get reduced. Okay, and similarly with the liability increment, suppose if a government takes a loan, so though it gets the money, but it is also created a liability which it needs to pay in the future. Okay, so this is a way to understand asset reduction and liability increment. These are the features that I just written. And if somebody asks you what are the further detailed component of revenue receipt and capital receipt, you can divide the revenue receipts as two types: direct and other is indirect. Or not direct, we can use tax and non-tax. Tax and non-tax, we can go with this. So tax revenue receipt and non-tax revenue receipt. In the tax revenue receipt, you can have two aspects. One is direct taxes and other one are indirect taxes. So under the tax head we have direct taxations and we have indirect taxation. We can remember certain examples. Let me change the color so it would be better for you to recollect in the exam. So in the direct taxation, what you have, you must be paying the income tax. So income tax is example of direct taxation. Then you also pay corporate tax. Corporate tax is example of direct taxation. Or there is wealth tax that you pay on the wealth. That's also the example of direct taxation. Or let's say if you are a rich person and you have large estate, then estate duties are also paid. So estate tax. Or you get some gift from some friend, so you also have to pay tax on gift tax. So these are all the types of direct taxation which you can remember for your examination. In case of indirect taxation, recently in India we have GST, which clubbed center and state taxes, which were predominantly of indirect type, and they include excise duty. You know, excise duty, it is imposed on the manufactured commodities. So manufactured commodities have to be paid with excise duty. Then you had custom duty. Custom duty belongs to the imports that enters into your market. So imports entering into your economy, okay. And there are other entertainment tax, octroi, entertainment tax or octroi. Octroi tax is nothing but entry tax into the village. This is octroi, okay. So this you can remember to in the direct taxation. Now in case of indirect taxation, you can remember there are other ways in which government also gets the revenue receipt. See, we are all discussing about the revenue receipt, and this revenue receipt in the non-taxation side, you can find that sometime government get the grants from IMF, World Bank, or any other multilateral institutions. Okay. Then you also get the interest payments on loans given by you. Okay, interest payments on loans given by you. So broadly these two we consider as a non-tax, and this is how we are able to conclude what are the direct taxes and direct non-tax receipts, revenue receipts that the government gets. So we have looked into both direct taxes, indirect taxes, and non-taxes, and these are just the receipt side. Now we have to look into the capital receipts. So I think I need to write here. Now we will be looking into the capital receipts. Capital receipts, how we can get capital receipts? Capital receipts can be accrued if we sell the public sector units. If we sell the public sector unit, what we are doing? We are diluting assets. We are diluting assets. When you sell the assets, we get the money, but we lose the ownership. Ownership is reduced. Okay. So we get the money, but ownership is reduced. So selling PSUs. Or how we can get the further capital receipts? We can get the capital receipts if we borrow. Borrow what? Borrow loans. So we get the money, but we have to pay back principal plus interest rates. Today we get the principal today, but that will become a liability that needs to be paid in the future. So this is the future mein you have to pay back. So these are the capital receipts which you basically have. Okay, so I think in the receipt section we are broadly completed. Now if we want to look into the expenditure side, we can discuss a little below there. So again, in the expenditure side, let me write here. So there are two types of expenditure. One is revenue expenditure, and one is capital expenditure. Okay, so under revenue expenditure, here you have to spend the money. So you can spend the money in salary, pensions, or subsidy, or you can always go on for some defense payments. Okay, so these are broadly recurring, and it is a broadly compulsion of the government, so it is somewhat fixed. Okay, and when we talk about the capital expenditure, so capital expenditure is about creating assets. So creating assets, and in creating asset, where we spend in the roads, buildings, machines. In these way we create asset, that's a capital expenditure. Or let's say government is creating one more PSU, or government is building a new industry, so in that way it will be considered as a government expenditure. Or government acquiring a new company, so all what you have to do, you have to give the money, and you will get that company be part of you. But in this process, this is expenditure because you have to give the money. So naturally the money is going, but you are getting what? You are creating an asset with you. So we ought to have seen road, buildings, machines, PSU, industries, acquiring new companies. So these are broadly termed as expenditure side. So I think we have discussed about both receipt side, and we have discussed about the expenditure side. And holistically discussing about the two, we can in very brief discuss about some of the deficit. So what is budget? So I had in the very starting wrote that budget is nothing but talks about revenue and expenditure side of the government. So when I say budget, it includes both revenue and expenditure. Okay, so when I say about budget deficit, so budget deficit is defined as, it is about government expenditure minus total government receipts. So I will write total government expenditure minus total government receipts. You can correct a bit, it is receipts. Okay, so total government expenditure minus total government receipt, it is called budget deficit. And one very important concept is called fiscal deficit. What it is fiscal deficit all about? Fiscal deficit is about, you have to you can remember it in a very layman way, that it is the total borrowing need of the economy, and the formula of fiscal deficit is total expenditure, that is both revenue plus capital minus revenue receipt plus non debt creating capital receipt. Okay, so it is total expenditure minus revenue receipt plus non debt creating capital receipt. So what it will give? It will give those component of the budget that you need to borrow. That's what I have written, the total borrowing needs of the economy. So this is the total borrowing needs of the economy that the government needs to borrow. Okay, so needs of borrowing, and this include the borrowing of today, current, and the previous borrowings. So it is nothing but the cumulative borrowing that the government has did. So by doing so, we get the total borrowing need that the government has to fulfill, current plus past. Okay, this is budget deficit, fiscal deficit. Now if you want to look into what is primary deficit, primary deficit is equal to fiscal deficit minus the liabilities from previous budget. So when you subtract the fiscal deficit minus liabilities from the previous budget, you get the what kind of liabilities you have created in the time period of the current financial year. So it basically gives a clearer picture ki whether you are going for fiscal consolidation or you are going for fiscal expansion, which was not prudent. So it gives an idea of fiscal prudence, okay, or non-prudence. If you find this value increasing with every successive year, it shows that your current expenditure is increasing, and it is not a good sign for any economy, because then your debt become unsustainable. So debt sustainability comes into question. And you might have heard about the United States facing the very high debt burden. India also had a very high debt burden. So that is why this entire analysis is very important with respect to government budget. I hope you got some insight about it. If you got any queries regarding it, you can very well mention it in the comment box. We will surely reply to you. Okay, thanks a lot.